Hello traders, this is ICT with a Per Traders Club entry for September 4th, 2012. It's the first edition of our 2012-2013 series, and just a reminder, there will not be a market review on Friday nights. That is a tutorial section. Every week I'll give you a Pro Traders tip. Some will be much more in depth than others, but again, there will be no market reviews on Friday nights. The market review for Friday's action and going into the new week will be covered on Sunday evenings. So just a reminder. Also, we don't trade non-farm payroll, so we'll be in no rush to actually talk about that market action anyway. Alright, we're looking at the dollar index. On the left-hand side, we have the daily chart, and on the right-hand side, I have a 4-hour chart. And we've had all these levels noted for some time now. The low that we've taken out here, we've punched below that, and we've since tried to retest this area as support broken, now resistance. So we got to really watch that 81.45, 81.50 area up in here. Should we break above that and then come and find support, that could bode well for a short to intermediate term low in the dollar. So that is something I'm looking at as a potential. The low that we've posted here, that has to maintain support, obviously, on the near term to stave off any continuous slide on the dollar. Should the dollar slide again, I think this would be the last push up for the fiber and cable, and it will seek its low. And by that I mean, if the dollar slides, I think it's going to probably reach for this old high back here, which is 80.70, which is essentially the 80.80 level. So if we do see further downside on the dollar index, that 80, 70, 80 level, certainly one I'm going to be watching for a possible bounce, and that would potentially translate to a short to intermediate term high in the foreign currency markets. Now, if this level should break down even further, obviously the next levels to consider would be the range between this low here and this high, and we're not going to cover that here because I don't think it's necessary to do that between now and tomorrow's market review. So, but you can probably do the work of it by yourself in advance by taking your fib from here to here, and then this low to this high as well, looking for the range. So, using the concepts we learned inside the range webinar on August 19th is certainly applicable there. Should we bounce at this level, or even for where we're at right now, because this could potentially be a turtle soup environment where we've broke below this low here, and then we may rally up to give another potential swing trade opportunity. So we would take the high here down to the low that's already been established here. Should it stay and remain in place, and then you would look for upside retracements, and let's look at that, what that might be. Okay, we could reach back as far as the 82.90 level, and the sweet spot 83.17, essentially 83.20, and obviously just a little bit above the 83.45, 83.50 level. So if we do bounce in here, that could be an area to be watching on the daily. Right now it's just a little too hard to tell because we haven't really established a fractal low in here, but we're just looking at potential scenarios that may unfold. Okay, so let's take a look at the fiber. Okay, we have the daily chart on the left hand side, and on the right we have a 15-minute chart. Now we've had price come down here, this old fractal in here on a 15-minute chart. Now we've had this market action covered in a live stream recording a few days ago, but this area also has provided an area of support. Short-term resistance here, broken here, now comes down to it again. Resistance broken will become, by our understanding in price action, new support. You can see how prices, it's more or less tried to hold price at this level. Now I don't particularly like this price action. I think this is suspect. I think we may be seeing some possible erosion lower, and if you take the high here down to this low, which is what we talked about the other day on the live stream recording, so you can take a look at that on my live stream channel. We talked about how this box was highlighting an area where we would potentially look for a retracement back into this range, this high down to this low, and it was actually calling this little short-term high, and it pulled back and then rallied back up. But in that same area we have the opportunity that unfolded last night in London. So let's drill down to a 5-minute chart and take a look at what that was. Okay, here we have midnight New York time, and we had a rather large Asian range, and whenever we have an Asian range 40 pips or so, and we have 45 here, typically you'll see the optimal trade entry pattern form within the confines of the Asian range, low and high. Okay, so we have that in here. This box is delineating the London Open kill zone, and it's also delineating where that higher time frame retracement level would be for optimal trade entry using the previous range. So also we have noted here the big institutional level that we like to watch is the 126.20, the 20 levels, 80 levels, 50s, and full figures. Very psychological impact in terms of support and resistance. They're implied levels for probable support and resistance. So when they line up technically with other factors that are actually in the price itself, it's a really nice confluence of events to suggest support or resistance. Now we had today, this run up above the previous day's high, and then we've since gave up the ghost and traded back lower. I do suspect that we're probably pricing in some form of a high. I don't know if it's going to be an intermediate term or long-term high, but it's certainly one that could be probably capitalized on during London tonight. So let's take a look at what transpired in here. We did see price run up in here and then fell off and then came right back up to the figure, and I'm sorry, the 126.20 level. So if you take your fib, let's drill a little bit tighter so you can see it. Okay, here's that price swing in here, trading right back up to that 20 level. You run your fib on that, and this is a London Open setup. You have the 126.20 level laying directly on top of the sweet spot. Okay, so there's your opportunity to trade London Open, and this candle here was 7:35 GMT. Okay, so it's well within the confines of our really high odds probable London Open high or low forming for the day. So look at the trading the key swing points in the Forex video, and you'll see how we map out that that particular kill zone in the London Open and in the New York kill zone. So you can see how those particular time frames really line up, very high probability trade setups. Now, the fact that we're expecting price to maintain its range, and that's being over here, we're looking at the 126 figure. Now we did see price stab above it, okay, and you have to expect that because again we don't work within black and white, we work within a gray area where probabilities shift in and out, and support and resistance are never limited to specific levels. There's always going to be some deviation, and you see that in the form of these wicks here, okay. So having had the previous day's low broken down, we have all these wicks pressing above this 79-cent retracement level based on a longer, higher time frame price swing that we've been covering for some weeks now. There's no follow through initially, okay, and we do have a suspect low probably forming in the dollar. Now we've had the yields slipping and the dollar falling as well. We did have the futures market on the bond market. Actually, the contract itself has been rallying, and it hasn't had any participation by the dollar on the upside. And I suspect that at some point this week we may see that actually unfold, and that would actually give some downside pressure on the foreign currency market. So, and I'll give you some charts about that tomorrow night. I do want to get through this one rather quickly because I did talk a little bit more than I wanted to today, and then a little bit hoarse, so I have to preserve my voice and try to give you guys an opportunity to hear me be able to speak the rest of the week. So we had price slip down in here and then fell out of bed obviously even further going into the New York Open session down in here. So we had a very weak opportunity really in terms of getting a New York Open set up. This was an opportunity where you could have used the previous range inside the daily range that we've already established, the high in London. Okay, and here's your sweet spot here, looking for the 125.95 level in here. You could have reached for that if you were looking for a short, the continuation down to this old low, or you could have used the railroad tracks in here. Now notice that we did come all the way back here to run out anyone that would have been particularly short from this particular level here using an old level intraday. So they did come back for those individuals and came back and run the previous intraday low. And then since then we've consolidated and did some pretty ugly trading and consolidation. So right now I do suspect that we're probably setting up some form of base, and then they'll probably run it up out of the Asian range up as a Judas swing, and then maybe even further downside slipping to probably the 125 figure, 124.80 levels. One I'm particularly paying attention to. The higher time frame, that 125.40 level is one to watch also. It's the sweet spot on the higher time frame retracement that we've been talking about as well. So for me, if I was a hard-nosed fiber trader, I would be looking for obviously the little area of support that we've had a price finding little bounces at. I do think that we'll probably see a Asian range and a move out of the Asian range up to look for some kind of a short. And using this high here, I'm gonna give you a possible scenario that I would be looking for to trade within a demo account setting. You could look for the 125.80 to 125. We can really, I guess, expect it to shoot to 90 on the worst case scenario on a spike. So anywhere between 125.80 125.90 should price trade up to that outside of the Asian range. That would be one that I would be considering as a possible short to maybe even slip below and try to reach for that 125.40 level as a intraday trade. So that's one that you might want to take a look at for a demo account trade, see how that works out for you. Alright, we had a rather ugly trading session today. We did have price run up in here and fall off. So we ran above that 159 figure. We were talking about how price may look to hold its range, and that range being the 158 to 159 range that we have over here noted on the daily chart. So what took place here in London, let's drill in a little bit tighter. Okay, let's take this fib off. Okay, we have this minor dip down inside of the Asian range. Okay, and we'll talk about that in a second. Okay, we have reflection in here at the 159 figure, so we have convergence with that. We also have turtle soup, which is these old highs back here. See how very clean these levels are? Again, now I know this is a 5-minute chart, guys, but still we have to understand that this is where stops will be resting, because folks are going to be looking at that institutional 159 thinking it's going to be a barrier, and they'll place their stops just on the other side of that. Okay, and you see them being tagged here. Now watch what happens. You had price run up out of the Asian range here, ran the figure, okay, and then slipped down below the Asian range low. Okay, we have this spike down here as well, but this particular area right here we're going to look at in a moment as well. But look how they took price all the way back up, and just by 1 pip to run above this initial high. Okay, so you don't think that they know what your stops are? They absolutely do, and you can see that unfolding right here. Okay, so you have that as further evidence that this is a stop run on folks that were established a short position in London and came all the way down, and then came right back for them in the New York news releases that came out today. So let's look at how we could have potentially traded. And again, obviously y'all know that I wasn't trading today, so this is obviously hindsight and cherry picking, but this is how you could have used it. We have been bullish, looking for a potential push above that 159 to look for 159.50, maybe even the 160 level. So if we use this swing here, okay, see how this low to high, previous day's low up to the high made in London Open. You want to be a buyer below the Asian range high, or look for a Judas swing down outside of the Asian range. Okay, now the Judas came a little late in the day. This is 1300 GMT, so that's New York Open. But you had the 79-cent retracement level that it ran to. Sweet spot here, it bounced at this point and then dipped below, ran the stops on those individuals, and then rallied all the way back up to take out the old high. So this is one where you would be looking for your profits at this high here. And had you done that, okay, we're going to use the sweet spot as your entry, and just using this level here. It's about 40 pips. Okay, not much, nothing to brag about, but certainly something you could have took 25-30 pips out of for an intraday scalp. So that's one opportunity that did present itself in the cable, but it's more or less it was a seek and destroy type of event, like a Z day. And again, the same scenario, I think that we may see a possible Asian range, and if we see a Judas swing up out of that Asian range, I would be interested in looking for some kind of a short, maybe at the 158.90. If it gets back all the way up to the 159 figure, it may have enough steam to try to gun above these highs that's already been established as well. So in this regard, I think that the cable is a little bit tricky. I wouldn't be looking to short the cable, obviously, and that goes back to what we've talked about. And I was unfortunately not right with last Friday, looking to short the fiber for sells and not looking to short the cable. But today was that scenario. It was very weak today in the fiber versus the cable. So I would be looking for an opportunity to get short in the fiber versus doing anything in the cable. So really my focus now is in London. I'll be paying more attention to Euro USD than I am cable. So obviously we're going to look at the price action between the two, look for SMT diversions, and more or less look for confluence of events. But if we do not get the scenario that we have an Asian range and Judas up out of it, there will be no trade from me. So that's it for tonight, guys, and I certainly do wish you good luck and good trading.